Welcome everyone joining. I see the numbers rolling in. I think there was about 1,200 of you who RSVP'd, so we're excited for this presentation. And as you come in, go ahead and drop where you're from in the chat. Would love a little intro. Yes, the vibes are high, Michael. It is a Friday, finally. Just gonna give it a couple more seconds for some more people to join, and then we'll get going. Woo! Portland, New York, Long Beach. I'm in Southern California. San Diego, we're neighbors. Awesome. So we'll go ahead and get started because we do have quite a bit of content here for you guys to cover. Here we're going to be talking about all things S-corps for therapists, presented by Herd, myself, and Andrew. Thank you so much for joining. We want to give a reminder that if you have any questions throughout this presentation, please drop them in the Q&A. We want this to be as interactive as possible. You can also upvote questions that someone else answers or someone else asks. If you're like, I have the same exact question, I hope they answer that. Go ahead and upvote that and we will make sure to get to it. This webinar is being recorded, so it will be emailed to you in about 24 hours after this presentation. If you don't get the email or don't receive the recording, please email me directly. My email should be in the email that you registered for at this presentation. All right, so just to kick us off, how are you feeling about S-corps? Drop a number in the chat. Really lost, confused. 4, wow, okay, we got someone who's confident here. That's awesome. A good mix of people. Yeah, well, we don't by any means, we always give this disclaimer before our webinars. We don't expect you to leave this being like, I am an S-corp expert, I know everything. If you can just get one piece of knowledge from this webinar, then that is a win. And like we said, ask any questions that you have. No question is too small or simple. Likely someone else has your question as well. Just a little overview about Herd. Also, I'm just curious, do we have some Herd customers in the chat here? Go ahead and drop if you're a Herd customer. Thank you for joining. So if you're unfamiliar, Herd is a financial back office for therapists. We handle your bookkeeping, reporting, tax prep, S-corp election, full service payroll. So all of the stuff that might feel a little bit stressful to you, we take off of your plate here at Herd. And Andrew, I will let you do your intro here.
All right. Happy Friday, everybody. I am excited to talk about one of the sexiest topics in private practice accounting that therapists love to chat with us about, S corporations. Excuse me. Before we get in, a little bit of an intro on myself. I am one of the co-founders at Herd. Shout out to all of the fellow Herdians on the call that have joined. As Brittany said, please ask all of the questions that you have coming up throughout the entire presentation. It makes it so much more fun for me. This material can be very dry, but we will try to spruce it up and make it fun. A little bit about myself. I am a lifelong nerdy accountant. I've spent my entire career trying to escape accounting, but everything I have done has led back to accounting. I am husband to a clinical psychologist who focuses on dialectical behavioral therapy. And by proxy of her being a part of a never-ending PhD program, most of my best friends are also now clinical psychologists. I'm actually not sure if like the program is still over, but that's a separate conversation. And then on a personal level, I've dealt with panic disorder and anxiety and depression since I can ever remember. And so I've spent 2+ decades on the other side of the room. And so I'm grateful for the work that you all do and grateful for the opportunity that I have at the intersection of something I'm so passionate about supporting. So thank you for coming today. And I'm really, really excited to dive in and talk through all of this good stuff.
Definitely. Awesome. All right, so a quick agenda. We're going to go over business entity types. We're going to learn what an S-corp is and how it's different than a business entity. Learn who is a good fit for S-corp, how and when to elect S-corp, and to learn what you need to stay compliant as an S-corp. If you have joined late, this is a reminder that we are recording this presentation and we will send this out. So if you're just like, this is an overload of information, you will be able to rewatch it if you so please, and we will send that recording out tomorrow. Okay, let's kick it off here.
Yeah, so one of my toxic traits, as Brittany will allude to every once in a while, is that I have the proclivity to overload with information. And so we have lots of slides to work through. And so I will move through as quickly as possible. I will use the most plain language possible. But please, if I'm using terms and you're like, Andrew, what the heck are you freaking talking about? Drop a question into the chat, and I promise that I will help explain these concepts as best I can. The most important thing to talk about to frame up the conversation for S corporations is talking through the different types of business entities. This is a very common point of confusion for clinicians. And so I want to ground us in what are the different types of business entities, and then what does it actually mean to be an S corporation? So the most common type of business entity, over 75% of the providers that we work with on Herd are sole proprietors. And this is the default IRS tax designation for self-employed therapists. And so the unfortunate part of being a sole proprietor is that you pay 15.3% in self-employment tax. And given that we have probably 175 clinicians on this call, many of you are probably sole proprietors, and one of the main reasons you're here is like, wow, I got my tax bill, or holy crap, I feel like I'm paying a lot in taxes. And so hopefully we'll illuminate some strategies on how you might be able to reduce that. But in the most straightforward discussion or description of this, it's the simplest business structure with no formal formation requirements. And so if Brittany and her therapy practice working part-time at Herd decided, hey, next week I'm going to start seeing 3 clients, I'm going to set up simple practice, I'm going to get paid for the work that I do. In the eyes of the IRS, if she doesn't get a tax ID, if she does nothing else, she is considered self-employed and considered a sole proprietor.
All right, and thank you guys for all the questions that are coming in here. Awesome questions. First question here, is S-corp a good choice for a group practice?
Yes, I will dive through when we get a little bit later into the deck, when it makes sense to elect and what kind of the number roughly is from a revenue standpoint where you might think about exploring it, because it could be a number of different things. So we'll wait for that, wait for that slide before we dive into that.
Well, and then here it says it's a default IRS tax designation. So do I have to do anything to be seen as a sole proprietor?
You just gotta be you. You gotta be you. You gotta seek clients and do nothing else besides that, and you'll be treated as a sole proprietor. The actual formal name, which is very unfortunate, is disregarded entity. And so the IRS is stating that sole proprietors or LLCs or PLLCs, which we'll talk through, if you do not elect to be taxed as a corporation, you're going to be, yes, I know, Sophia, it's unfortunate. You'll be treated as a disregarded entity.
Yes, not disregarded in our eyes. So
No, not disregarded in our eyes. But what that simply means is that you'll have a Schedule C, so a simple profit and loss on your Form 1040, which is your individual income tax return.
awesome.
Awesome. LLC, PLLC, all of the different types of entities. Big shout out to Josue, who put this deck together and is our designer and had this simple touch of a cowboy hat on the Texas. I'm kind of living for that at this moment. Limited liability company. So this is a business that is an entity that's registered at the state level. Some states, however, many states offer or require more specifically a professional LLC or a PLLC. I do want to caveat, I am not a legal professional, and so take any sort of commentary around this with a grain of salt and always talk to a professional. This is what accountants are very good at doing. But a PLLC is a flexible business structure offering limited liability protection to its owners. And so the difference between a PLLC and an LLC is that in some states, those states require that licensed professional set up a PLLC, or there's another format, which I'll talk through in the next slide, professional corporation. Given that we have so many folks on the call from probably many different states, given that we work with folks in nearly all 50 states at Herd, this could look different or feel different for everybody on this call. But the important thing to acknowledge here is that LLCs are taxed as sole proprietors unless you elect to be taxed as a C corporation or unless you elect to be taxed as a S corporation. And we'll dive into what that means and what that taxation flow looks like.
Awesome. Yes, I see a lot of questions coming in about when the right time is to become an S corp, and that will be a big thing we will dive into. And it is one of the most common questions we get, and the reason that we made this webinar in the first place. Cool. Is it required for me to have a business entity?
Not at all. And in fact, I think when you're just getting started out, layering in the complexity of filing to register a new business entity, registering at the state level, having to worry about an annual report and annual compliance might add more additional complexity. And so if you decide, hey, I don't actually want to set up a formal business entity, I don't want to worry about that. I don't, or I'm not super concerned about the liability protection that comes from having that separation of a business entity to my personal self. An alternative is just getting a tax ID with your sole proprietorship and setting up your business that way, because what that'll enable you to do is set up a separate service of process. And so you can at least separate your personal address and your personal social security number to a separate tax ID and a separate address. Totally great question.
Awesome. And can you talk about the difference between a PC and a PLLC?
Yes. Why don't we go ahead? That's a good tee up. Thank you for that question. Um, a PC. Let's talk about professional corporations. So some states, and California being a great example of this, you are not able to form an LLC or a PLLC. You must form a professional corporation first. And so a professional corporation is similar to a PLLC insofar that it's a business entity for a licensed professional, but it's very different from a tax standpoint. And so why this is important is that if you are making the decision to be tax or to form a professional corporation because you want to set up an S-corp or because you want to have a formal business entity, the thing that you should know is that when you set up that professional corporation, if you do not elect to be taxed as an S corporation, which is a pass-through, you will be taxed at the business level and you will be taxed at the personal level. And for small businesses, I would say 99% plus, setting up a C corporation is not going to be the most advantageous tax structure. And you certainly don't want to be taxed at the business level and the personal level as well. And so for our California folks on the call, if you do come out of this conversation, or if you have been thinking about forming an S corporation, just know that the first step of that is forming a professional corporation to set yourself up to form an S corp. But if you don't elect to be taxed as an S corp, you will file a Form 1120, which means you'll be facing double taxation, which is not fun.
So just a quick clarifier. So does everyone have a tax ID? Do I have it, or how would I find my tax ID?
Uh, Contextually, yes, because your tax ID or the identification that the IRS looks at could be your social security number. But does everybody have a tax ID or an EIN that they've set up, whether with their sole proprietorship or a business entity? That totally depends on if you took the action to actually do that. So it could be a number of different things, and it is totally okay if you're a sole proprietor that operates with your SSN, and that's the level of complexity that you want to be at.
So on this slide, we say in California, therapists form a professional corporation. Is it only relevant for therapists who are in California?
We're actually working on a great piece of content around this to provide a state-by-state look at the type of business entity that you can form. So stay tuned on that. But to kind of reiterate that question, the question was, is it just California where professional corporations are relevant? No. There's many states, I think it's 35, where you can form a PLLC or a professional corporation. California, I just like to always call out because we oftentimes have lots of folks from California, and it's not always super fun to rework or take a step back from an LLC to then form a professional corporation. And so many states allow professional corporation or a PLLC. Many states require a professional corporation or a PLLC. Great clarifying question.
Perfect. Just looking at the questions here. All right, let us go ahead and move forward. I also just still am really, I just in awe of Josue's design on these slides. These slides are new, so those are awesome. Cool.
Awesome. And keep the questions coming. It's awesome. I was in a workshop earlier this week and there was like 10 questions asked the entire presentation. And so Brittany and I were like creating questions to ask each other. So this is much more
We
fun.
love,
So keep
love talking. Yeah, we love hanging out, but we like your questions better.
No, we talk enough. No, great questions. Keep them coming. So what's an S-corp? An S-corp is an IRS tax designation. And so we just talked about business entities. We talked about sole proprietors. We talked about LLCs and PLLCs. We talked about professional corporations. We didn't talk about partnerships or C corporations, but those are other types of business entities as well. The big distinguishing factor here is that an S-corp is a designation that you are electing with the IRS. And what I mean when I say it's a designation with the IRS is that it's available to corporations and LLCs and PLLCs to elect to be taxed in a certain way, but it is not a business entity, which is very confusing. And shout out to the IRS for deciding, hey, we're going to decide what a specific tax type is of how we want to be taxed. And we're going to call it a corporation to make it really easy for people to understand. And so it is confusing. But the difference is when you're taxed as an S corp, you're setting yourself up both as the owner and the employee of your therapy practice. And so what that means, and we'll talk about the tax advantages of that, is that you set up payroll and pay yourself a reasonable salary as an employee. So you're like, hey, I'm crushing it as a therapist in my own practice, a practice of one in many cases. I'm going to pay myself a reasonable salary. I'll talk through how you calculate that. But then you also take owner's distributions. And why S corps are tax advantageous is that those owners' distributions, you're not paying self-employment tax against that. For the payroll taxes, of course, you have Social Security, Medicare, unemployment tax, all of those fun taxes that equate to the 15.3% that you would be paying in self-employment tax. But those owners' distributions, so what's left over after expenses and reasonable salary, you only pay federal and state or local income tax as well for the folks in New York and other areas where that's relevant. And so there can be a meaningful amount of savings against those owners' distributions.
And when you talk about reasonable salary, how is that something that I would document for the IRS? Like, how does the IRS know that I'm paying myself a reasonable salary?
Yeah, that's a great question. So a couple ways that you can approach that. You could be the one that's manually filing the forms at the state level and at the IRS or the federal level, saying that, hey, I'm paying myself and then I'm setting aside money to pay into payroll taxes and pay into federal income tax and state income tax. If you've ever looked at your W-2, what you would see is your federal income tax, your state income tax, Social Security, Medicare, unemployment, all of that stuff. And so you could do that manually and file that. But most likely what you'll do when you set up an S corp is also set up payroll through a payroll processor. And so at Herd, we have our own payroll. Gusto has their own payroll. Square has their own payroll. QuickBooks has their own payroll. But how you determine that reasonable salary, we'll spend a little bit of time talking through that. But the way that you document it is understanding the qualitative determinants of where you are, what your license type is, how many years you've been in practice, what comparative or competitive salaries look like in that area. And then quantitatively, looking at the total amount of income that you have and getting back to a reasonable percentage of that overall income.
Awesome. And then as far as consistency or the like schedule of how I pay myself, does that matter? Can I pay myself weekly, monthly, quarterly?
One of my friends runs a production company in Seattle, and he set up an S corp at the very end of last year because it was advantageous for him, and he ran payroll on the last day. And so you could run it on the last day of the year. That would make things very, very stressful. I would recommend building out a process and a system and a consistent cadence. It'll be helpful in understanding both how your total pay from W-2 and also your distributions map back to that overall pay. So what we most typically see is that providers are paying themselves payroll and doing distributions on either a biweekly or a monthly basis because most of these folks that we're working with are solo business owners and you have personal overhead that you're accountable for and need to be responsible for covering. So typically on a biweekly or a monthly cadence.
Great question.
Why should I elect to be taxed as an S corp? So this list could be very long. And there's also alternative reasons why an S-corp might not be right for you. And I'll talk through both of those as well. One of the big ones is if you're setting up a professional corporation as an example, you're able to avoid double taxation. So that income that you're earning is passing through back to your personal tax return. You're saving money on those self-employment taxes through the owner's distributions, and you're not paying at the business level and the personal level. The other piece of that is that you're avoiding paying self-employment tax as a sole proprietor or a disregarded entity, whether that's a sole prop or an LLC or a PLLC that has not elected to be taxed as a corporation. You are avoiding, quote unquote, or receiving the benefit of tax-free dividends in the form of those owners' distributions. And so for a meaningful percentage of your income, you're no longer paying self-employment tax. Of course, when you form a legal business entity and go from a sole proprietor to an LLC or a PLLC or a corporation and elect to be taxed as an S corporation, you'll have that additional legal protection as well that comes from that formal business entity. A couple other things to account for is when you set up an S corporation, there's a bit more flexibility from tax saving strategies in the long term as well. And so you can set up what's called an accountable plan. And so you can run different types of indirect expenses through your practice, things like phone, things like internet, that's relevant to your business, to be clear, not just all of your personal. But you can also do things like which you could do as an LLC or PLC, but run and register health insurance through your business. And you would have access to a different type of retirement account that might provide a more advantageous or a larger amount of a contribution threshold, like a solo 401k. And so there's a lot more flexibility in being an S corporation than simply being an LLC or a sole proprietor.
And if I was transitioning to S corp, does that affect my employees at all?
If I was transitioning from a sole proprietor to an S corp, no. So it would affect you as a business owner because in order to have employees, you need to register at the state level. Well, you need to have a tax ID with your sole proprietorship in order to have employees. And then you would need to register at the state level and you need to register federally, of course, that you have employees and you would need to be filing these tax forms as well. And so the headache in that would be that you'd need to re-register with a new business entity after you form that formal business entity to set up the S corporation. Great question. I love that.
Yeah, that was a good question. When it's so fun to get the new questions with
I
these
know.
slide deck. It's a good refresh. And when you talk about legal protections for being a S corp, what are some of those legal protections?
Yeah, so let me reframe that a little bit. So the legal protection comes from the formal business entity that you set up. However, as a licensed professional and specifically as a healthcare or a clinician, a clinical professional, you're still going to need professional liability insurance, malpractice insurance. And so that liability protection of separating your personal assets from your business assets. And if you do make that determination, you need to make sure that those things are separate. Otherwise, it becomes muddied. And when there's crossover, you don't reap those benefits. And so having that separation enables you to have a separation. So God forbid, let's imagine Brittany in her practice was sued by one of the clients that she's working with. Her personal assets, so things like a home, if she owns a home, or things like real estate or investments wouldn't be subject to any sort of legal action or litigation. I think I just made up that word. We're gonna pass on that. Any litigation. But again, there are certain gaps in that liability protection that impact healthcare professionals, which is why it's so important. Thank you, Jen. I appreciate the grace. Which is why it's so important to have malpractice insurance, whether it's, through CPH or the trust or wherever you might have it.
Great question. And then this is just a quick clarifying question here. Is there a difference between your salary and an owner's distribution?
Yep, 100%. And what's the next slide? Because I think that might be a good lead into the next slide. Boom. Yeah, perfect. Okay. Brittany, I feel like you're just like teeing up these questions. Are these real questions from people? It's like the perfect follow through. So how S corps help you save? So let's talk through two specific examples. And because Brittany is my go-to example, we're going to talk through Brittany's therapy practice. And so Sole prop Brittany, living her life, is absolutely rocking it, makes $80,000 in net profit. Litigious, thank you, Jay. I appreciate that. She is making $80,000 in net profit, owner's wages of $0 because she's not an S-corp and everything passes through back to her. And so there's a question that earlier came through that I think Mike answered, but you're saying that self-employment tax comes on top of federal income tax and state income tax. That's right. And so that effective tax rate can really grow. And so what we're representing here is just on that $80,000, what that 15.3% would amount to. And so of that total $80,000, you're paying $12,200 in self-employment tax alone. This is notwithstanding federal income tax and state income tax. And our friend Brittany is in California. And so she pays quite a bit in taxes. And so this is what it looks like as a sole prop or a single member LLC or PLLC that has not elected to be taxed as an S-corp, that is taxed as a pass-through entity, that is a disregarded entity in the eyes of the IRS. Let's imagine Brittany decides, hey, it makes sense for me to become an S-corp. Let me decide if it's a good fit for me. So same scenario, $80,000 of net profit. In this case, she pays herself $40,000 in W-2 wages or owner's wages. And that'll be paid to herself via payroll. And so she set up Gusto or, for the sake of a selfless or a selfish plug, set up Herd payroll. And so she's paying herself $40,000 through Herd payroll. And so if we think about self-employment tax synonymously with payroll taxes, because we're looking at, again, FICA, FUTA, so Social Security, Medicare, unemployment, all of that, she is reducing the amount that she's paying by nearly 6,120 to be precise, because she's only paying that against her owner's wages or her W-2 wages. And so what's left over after those wages is $40,000. I don't know if that math actually like totally aligns specifically to the 46K minus 80K, but for the sake of this, let's say that pass-through profit, the $40,000 that's left over, she only pays federal income tax and state income tax against that. And so when we think about the savings that comes from electing to be taxed as an S-corp, we look at the sole prop, $12,200 is accounted for against that 15.3%. And so she's paying self-employment tax or synonymous with payroll taxes on all of that profit that she earns. As an S-corp, she's only paying that against her owner's wages or her owner's W-2 that she's paying herself as an employee of the S-corp. And so whatever is left over, that passes through back to her in the form of a tax-free dividend. Again, you pay federal income tax, state income tax, and if it's relevant, local or city income tax.
Awesome. As far as benefits go, if I have an S-corp, does that affect how I contribute to my 401k?
That totally depends on how the 401k is set up. There's different types of investment vehicles. Gonna caveat here, I'm not a wealth manager. I did for a period of time work for one, but different types of investment vehicles that become available when you set up a formal business entity like an S-corp. So without knowing how your 401k is set up, I wouldn't be able to necessarily opine on that.
The classic, there has to be one time where I start talking when I am on mute. Just it's Zoom webinar, that's what we have to do. For S-corp savings, am I only saving like after I file my taxes, or is there savings like throughout the year?
That's a great question. And I think this is also a good time to introduce the potential downsides of being an S-corp as well. And so the savings throughout the year, that will come in the form of a reduction in the amount that you are paying to the IRS through the quarterly tax estimates that you're making. And so for that $40,000, you'll automatically be remitting the taxes, both from an income tax standpoint and a payroll tax standpoint through your payroll processor. Because again, I really hope that you don't make the decision to file this all yourself, or pay an accountant too much money to do that. Payroll processor, you'll probably pay $500 for the year, $550, something like that. And I'll talk through all of those costs. But what's left over here, again, you still have self-employment wages or income that you're earning that isn't being taxed, or those owners' distributions or those tax-free distributions that aren't being taxed. So you're still responsible for paying quarterly taxes throughout the year to the IRS and to the state if that's relevant. But the big difference is that you wouldn't be paying self-employment tax as a part of those quarterly tax payments. And so when you think about quarterly tax payments as a sole proprietor, you're paying a lot of money to the IRS because you're coupling both the federal income tax rate and the self-employment tax rate. And then you'll pay money to the state as well. But when you think about that self-employment tax, that's going to the federal level. And so that will be reduced throughout the year. And so the amount that you're paying in quarterly taxes will be significantly reduced. In the context of costs, because we're looking at this at a very meta level and we're saying, great, $80,000, $40,000 salary, $6,000 in savings. It sounds like an infomercial, honestly. But the difference is that there's going to be some administrative changes as well. And so bookkeeping is going to look different. It's going to be more complex. You're going to have to worry about not just your profit and loss, your income statement, but also a balance sheet and a retained earnings. And so in all likelihood, you'll probably work with a professional or spend more time doing it yourself if you are savvy and want to take that on yourself. But either way, it's a bigger cost and or more time, which also your time is money. The other piece, you would have an additional tax return as well. And so in all likelihood, you pay ballpark for a business tax return or 1120S is what you call an S-corp tax return, anywhere from 750 to 1200. It could be more, it could be less. Again, this is ballpark based on averages from what I've seen from kind of like the National CPA Association. The other piece that you'll pay for is payroll. And so I had alluded to that as well. That could be up to 500. And so quickly, when we're thinking about this, we see $6,000 and then we go, okay, there's $1,000 coming off of that. There's $500 coming off of that. Oh, and then there's like the time or the amount that I might pay an accountant coming off of that. And so quickly that comes down to maybe 3,000 or 3,500. And so why it's so important to do this calculation as well, and I'm sure Mike's probably dropped a calculator into the chat already, but why it's so important is because there are additional costs associated with that. So it's important to figure out when the time is right. And so I think the next slide, we actually talk about what the dollar amount is, or maybe we pause before we dive into that. Oh my gosh, great. Okay, we'll pause after this one. So am I a good fit for an S-corp? If you make the following in business profit, you should consider, this is not us saying you should 100% become an S-corp because transparently, some people don't like that additional complexity of being an S-corp. We've had clients that have transitioned to become an S-corp, and then they're like, you know what? Like, it was super simple for me as a sole proprietor. I'm fine with not having to think about this extra stuff from an accounting standpoint and fine with that difference of 2K or 3K of savings or whatever that might be. But what is the dollar threshold where you might consider exploring and working through the calculation process or talking to a professional? In California or New York, that threshold is a little bit higher because there's additional taxes or franchise taxes assessed against S corporations. And so we think that 100K is a good threshold to start exploring in business profit. And so that's what's left over after expenses. That's not your gross income or the total amount that you're earning. In the other 48 states, and there's probably some more degree of nuance in this, but for the sake of conversation, 60K is where it makes sense to start exploring if it makes sense for you, but the savings at that point will probably be marginal until you get to a certain threshold. And so figure out what's right for you, both from how I personally as a clinician want to spend my time and acknowledging the additional costs and investments and mapping out what those savings are. Do the calculus to figure out what that full equation looks like, both from a time, a money, and a cost savings perspective. And that's going to help you get back to the right answer. And again, it totally depends on your unique tax situation and your unique needs. Of course, one of the things that we can do is help you determine those tax savings and help you figure out if the timing is right. As I imagine, we've probably helped some of the folks on this call. Again, shout out to the Herdians.
Awesome. A lot of information. We know that
Yeah.
this is a lot, but we're here to help. Awesome. If I decide to become an S corp, is that something I can change? If so, how? If I decide to become one and I'm like, this is not working for me.
Yeah, totally. You just finish up the tax year and then you'd say, hey, IRS, I've decided that I don't really want to be taxed as an S corp anymore. And so let's imagine that, Brittany, you're an LLC, you've elected to be taxed as an S corp. You did 2023. 23, FY 23. You did 2023 as an S corp. You got to tax season, you filed your return. There's a form that you can file with the return to change your tax classification. It's a very simple and straightforward process. But the one thing to note is that for that period that you were elected as an S corp, you wouldn't be able to go back and change that because you already told the IRS what you were going to be. But you could change that on a prospective basis. Oh, Britt, I think you're muted.
We'll do it a second time. Awesome. Can S corps contribute to benefits like parental leave and life insurance as well?
Can S corps contribute to different types of benefits? You can build an accountable plan that enables you to offer benefits to yourself as an employee or others as an employee. There are specific nuances around each of the different types of offerings. Parental leave might be a bigger stretch. That might be something that you lean into at the state level, but certainly from an insurance standpoint, there's ways to offer policies to yourself through your S corporation.
And then one more question here. Does electing as an S corp increase the chance of being audited?
If you elect broadly as a kind of a benchmark from an audit standpoint, self-employed individuals, small business owners, solo business owners, you typically see like 1.5% to 2.5%. And more than does it increase the chance of audit, there are different areas of focus that the IRS has, and they have thresholds and benchmarks, of course, that they would dig into and explore. One of the big ones for S corporations is actually the reasonable salary. And so if you set up an S corporation and don't pay yourself a salary at all throughout the year, that's going to be a red flag for the IRS to say, hey, it feels like we're not getting the full amount of taxes that we should be getting. So figuring out the reasonable salary is a pretty critical element of that process. Outside of that, the typical areas that they're always going to dive into and explore: travel, meals and entertainment, vehicle use for business, which is certainly going to be a stretch for telehealth-based therapists. And so there are certain tax areas that they might dive into and view as bigger triggers than others that are a little bit more nuanced or qualitative or kind of gray when you look at the broader kind of guidance around how people are taking deductions.
All right, so as promised, we have a check-in. Just want to kind of gauge the audience. Do you know how to elect an S corp? If not, that is okay because we will be talking about it. Awesome. Got a lot of twos, some threes, a really good mix here. Fun. All right. I always lose my mouse. That is another thing that happens to me during these presentations. Cool. Move into how to elect an S corp.
Awesome. How do you elect an S corp? And so a couple different considerations here. So if you want to elect an S corp, and you've already formed an LLC or a PLLC, shout out to Joan, she's on it. If you've already formed an LLC or a PLLC or a professional corporation, then you can elect by March 15th. And so March 15th is the S corporation filing deadline from a tax standpoint, both to elect, but also the deadline of which you file your tax return. Now, one thing that I will say is that if you are forming the LLC or the PLLC or the professional corporation in the new tax year, you have 2 months and 15 days, or roughly 75 days following the election or following the formation of your new business entity to elect to be taxed as an S corporation. And so you can always make mid-year elections if you're forming a new business entity. And then the other nuance to this is that there is certainly late election relief. The likelihood of you being able to file after that March 15th deadline, if you've already formed a business entity and it's not a net new business entity, there is a possibility to it. But the challenge in that is that getting a hold of the IRS and the timeline of which it takes to hear back from the IRS around that election can put you into a potentially sticky spot from an accounting standpoint. If you elect on, let's say, like October, because you're like, I'm gonna set up payroll, I'm gonna, treat this as an S corp, and I'm just gonna take the risk. There's the risk that you get to the end of the year and you haven't heard back from them, or when you go to file your tax return, you find out that they denied the approval of your S corporation election. And so late election relief, if you do miss this March 15th deadline, is a possibility. But the thing that you want to do is make sure that you wait until you solidify the fact that you have been approved as an S corporation. And then lastly, if we're going to use some like buzzwords around what these specific forms are, the form 2553, this is the S corporation election or a small business corporation election to elect to be taxed as an S corporation in the eyes of the IRS. It's a very simple 3-page form where they are asking you information about when your tax year ends, when you want this effective date to be true, all of the other business information about you and the shareholders in the business that is electing to be taxed as an S corp. And then when the IRS says, "Hey, Brittany, your S corp is approved," you'll receive what's called a CP 261 in the mail.
Awesome. I took a drink of water right when you stopped that sentence. Perfect. So for electing an S corp, I know you mentioned there's a couple forms. Is this something that I can like easily do by myself, or is this something I should definitely like hire someone to do?
Yeah, this one is interesting. I hold multiple perspectives, and of course, like one of the things that we do on top of the other bookkeeping, payroll, and tax stuff is help people do this. And so maybe it's wrong of me to say this. If you're DIYing it and doing everything else yourself, should you go to a lawyer or an accountant and be overcharged? We don't actually charge for it, it's just a part of the subscription. But should I go to a separate lawyer or accountant and pay $2,500 to have this form simply filed? No, 100% not. Where things get expensive and where I would recommend you talking to a professional is the lead up to the filing of that form 2553. And so what that means is the formation of an LLC or a professional corporation or a PLLC, you want to make sure that you get that part really, really right. And working with a legal professional on that front can be helpful, especially in the states that you can't simply go to, LegalZoom or, Zen Business on your own and file a simple LLC. A lot of states have specific naming conventions and requirements at the board level. There's different types of entities that you can be and all of this stuff. And so you can get lost in that process pretty quickly. And so working with a professional there, I believe makes a lot of sense. But if you already have that business entity formed and you're going to somebody and you're saying, "Hey, can you help me just like become an S corp now? I'm already set up as a business." I would really question if they come back to you with high fees, like what is the specific work or the tactical work that you're going to do for me? Because I've seen in many cases, unfortunately, folks that are like less versed in this process being taken advantage of, which bugs the hell out of me.
Definitely. Okay, good question here. What are some of the reasons that the IRS may deny S corp election?
What are some of the reasons that the IRS may deny an S corporation election? To me, like I'll follow up after the fact with some thoughts to the list, but to me, what we've seen is there's not oftentimes like a super good reason. One of the reasons could be administratively, you included the wrong name or the tax identification didn't match, or you filed from a late election standpoint and they didn't accept it because it's past the deadline and they've decided that, okay, next year you're going to be taxed as a professional. And so oftentimes this will come from as an S corporation. Oftentimes the denials will come from late election reliefs and not having a solidified reason or evidence as to why it makes sense. Otherwise, it's typically just administrative errors in the process of filling out the form 2553 if you're on time.
Awesome. Good clarifying question here. If you're a sole proprietor and want to elect as an S corp, I know we just chatted about this form. Is all that you have to do complete the form 2553 by 315?
No, so if you're a sole proprietor, what you first need to do is determine in my specific state where I live, what type of business entity do I need to form? And then you can go to the Secretary of State or go to a lawyer or file online to set up that formal business entity. And then at that point that you've set up that formal business entity, got your tax ID, filed your report at the state level, then you can elect to be taxed as an S corporation. And so there's a sequencing in the actual process that takes place. And why that's important to acknowledge is that that can take a lot of time. In New York, as an example, like we've seen the formation of a PLLC take anywhere from 5 months to 9 months to 12 months. There's just a big backlog at the Secretary of State level and from a process standpoint. And so every state is totally different. California, their turnaround is pretty quick. I think we've seen as quick as like 3 days or 4 days. And so it depends on where the state is at from a process standpoint. How do you stay compliant? So, how do you avoid getting an audit? I don't think that's actually totally possible because audits are oftentimes at random. There are certain thresholds again and areas that they look into, but an audit may take place, and that's okay. To stay compliant, you must set up payroll. You must pay yourself a reasonable salary. And if there are specific franchise taxes, vis-a-vis California or New York, as an example, pay into those franchise taxes. There are annual reports associated with the actual business entity itself and every state that you need to file to stay compliant. And so in maintaining that business entity and also the tax classification, just depending on the specific state that you're in, and the type of business entity that you are, there are specific requirements that you need to take care of outside of just your income taxes to qualify that. Reasonable salary, what we see for reasonable salary, you could talk to 100 different accountants. They would all give you a different answer. They would all probably share the same qualitative determinants and factors that I had alluded to earlier. Location, type of licensure. So whether you're a psychologist or a psychiatrist or an LMFT or a professional counselor, LPC, then they would say how many years you've been doing it based on where you are. So Brittany, San Diego, what are you seeing from a salary standpoint? And then if you like really get down to the brass tacks at the end of the day, typically what they get back to from a salary standpoint is anywhere from 40 to 60% of total overall business profit. And that's what they get back to as a reasonable salary. There is, of course, a minimum salary in the eyes of the IRS that folks should be responsible for paying. And that's like a legal mandate. But it totally depends on your unique tax situation, primarily where you live and what your business looks like.
Yes, I mean, we always make this joke, but with everything, it can always be, it just kind of depends on your situation. We are all different individuals. We are not robots.
Yep.
Awesome. So for paying myself, do I need to set up a formal payroll system or can I just like transfer the money from my business account?
So for the tax-free dividends or the owner's draw that you would be taking separately from the reasonable salary, that'll look just the same as it has when you're a sole proprietor, right? So as a sole proprietor, you probably have a separate business checking and you're transferring into your personal savings or your personal checking, whatever that flow looks like for you. It's different for everyone. As an S corporation, you'll have payroll. And so you'll pay yourself through a payroll processing company if you're following best practice. And what that payroll processing company will file the related taxes, payroll taxes for you. And so a big risk in not staying compliant is not filing those payroll taxes. So whether it's Form 941 or Form 940, there are separate tax forms that you're responsible for filing at both the state level, if that's relevant to you, and at the federal level for having an employee, which could be you or could be you and other folks in your practice. And so, two different pathways. You are responsible for paying payroll taxes and submitting specific forms, again, at the state or the federal level. And then you're also separately going to have the owner's distribution or the tax-free dividends. And that will happen in the same way that it does for you right now as a sole proprietor. But the big thing is you'll need to keep track of all of those distributions and dividends because I'd alluded to this concept of a retained earnings. It's an important aspect of managing an S corporation is understanding how much money that is in your S corporation at any given point in time and managing those investments into the business and also the distributions out of the business because you'll report that on your tax return at the end of the year.
Great questions there.
Yeah, great questions. And then I think lastly, how do you file taxes? So how is this going to be different for me than if I were to be operating as a sole proprietor? And so as an S corporation, you have two income tax returns. Again, I had alluded to franchise tax returns. That's associated with the entity. But you have two income tax returns. You'll have your personal tax return, your Form 1040, and on your Form 1040, from that business tax return, you'll have a W-2 that you present for the income associated with you as an employee. And then I saw a question in the Q&A around K1s. You'll have a K1 that you also present on your tax return. And so you'll have two different types of income on your Form 1040 from your business tax return. You'll have the W-2 for the wages that you're paying yourself, and you'll have a K1, which is other income from an S corporation. And why these are two separate line items on your Form 1040 is because there are different types of taxation and different amounts of income being taxed, rather. And so the IRS wants to see this separately designated on the return. Separately, that business tax return I had alluded to. Typically, what you see is, again, you'll have the beginning of tax season, you'll file any sort of 1099s. This is heard as an example. You'll go through a tax checklist or an intake form, start work on your tax preparation for your 1120S, complete that tax return, and then once that's completed, you'll get the K1, which is the income owner's distribution from that 1120S or business tax return. You'll take that, file that on your Form 1040, your personal tax return alongside that W-2, and whatever else is inclusive in your personal financial situation.
Awesome. What do you do with the pass-through profits that you don't pay yourself as owner's wages? I'm not clear where the rest would go.
Yeah, so great question and an important question. Because a lot of people are like, hey, I haven't paid this out of my business, right? Like I shouldn't have to pay taxes on that. Um, it can look that way with certain types of business entities. But for an S corporation, you're electing to be taxed as an S corporation, which is a pass-through taxation. And so what that means is whether you make $50,000 and keep $40,000 in a given tax year, or you make let's say, $50,000 and pay yourself all $50,000, you're going to pay taxes, federal income tax, state income tax, local where it's relevant, against all of that $50,000 in the tax year. Certainly, there are implications from an accounting standpoint around the cost basis, the amount of money that's in your retained earnings, but you'll pay taxes on that total amount every single year.
And is it true that if you elect S Corp in 1 year, this can retroactively affect your previous tax years?
Depending on the year that you elect, where I've seen that happen, if I'm fully understanding the question, is somebody elected in the prior year, they forgot that they elected, and then they got to the new year, they filed an 1120S or a business tax return in the new year and forgot that they needed to file that in the prior year, and so they just filed the Form 1040. And so that's the example where I've seen it go wrong otherwise.
Muted again. Wow, that is a record. The three
Brittany.
times. I know. Awesome. Okay, one moment. Let me see if we can grab another question here from the chat. Thank you guys so much for the questions. I know that there are quite a lot that we did not get to. I'll have Mike go ahead and drop. We have a Facebook group if you're not already a part of that group that myself, Andrew, and Mike all monitor. So that is a really good place to ask also like your specific questions because we know, like we said earlier, everyone has unique situations. Okay. Does it matter if I have clients in multiple states? Can I still be an S corp?
Yep, totally. Of course, there's going to be potential tax implications depending on the taxability of the work that you're doing in a given state, but you can certainly be an S corporation.
Awesome. All right, let me go ahead and move forward here. Another energy check to see how you guys are feeling. I know that was quite a lot. Go ahead and drop that in the chat. There you go, Jen. Feeling confident.
Oh, Jen.
Yes. Awesome. And it's okay if you are feeling a little bit overwhelmed. That's not, I mean, obviously our intention is not to make you feel overwhelmed, but it is a lot. So just the reminder that if you gained one insight from this presentation, that is a win and it's a Friday. Awesome. So, quick overview on S-corp election with Herd. Our team takes care of paperwork and guides you through the process so that you can just focus on your practice. Plus, you get year-round accounting and tax support all in one place. I know a lot of you are already Herd customers, but if you are not and you're interested, you can go ahead and schedule a free consultation with us. We will also send this information out via email so that you have it just on hand, as well as the recording. I know someone also asked for the slides. We can download those for you so that you can have the slides instead of the recording as well. So just to make sure you have all of the things. Wonderful. Okay, and it looks like we have 5 minutes, so we will go ahead and go through some more questions. Okay, are there naming requirements for an S corp? Like as far as like what your practice is?
Naming conventions and requirements at the state level. Let me think of like a specific example of this. California, as an example, for professional corporations, for licensed clinical social workers, it has to be uh, first name, last name, licensed clinical social worker, and it has to be like Inc. or professional corp. And so the naming requirements and conventions, there is some of that at like the Secretary of State, so like the actual state level, but oftentimes that is coming from your specific board as to where you're located. So state level board. And so this could be the Board of Behavioral Sciences in California as an example. And they'll have specific requirements. And so when you're thinking about naming, taking a step back, if you want to own this and do this yourself, when you're thinking about naming, go to the Secretary of State. But before you do that, go to your state board and say, hey, are there any specific requirements to types of business entities that I can be or ways that I should name my business entity?
And is S corp a good option for a married couple, both therapists filing together?
That totally depends on your, also sounds like a very fun business. I don't know if I could do that with Natasha. Um, but sorry, I got distracted thinking about working with Natasha. But it just totally depends on your personal financial situation and the amount of money that you're earning.
And do you have different benefits for tax deductions as a S corp?
Um, To some degree, yes. I had alluded to this kind of briefly before, but you can structure what's called an accountable plan when you set up an S corporation. And there are different ways that you can structure how things like the home office deduction runs through, how you take advantage of indirect expenses. Again, there's also greater flexibility with things like solo 401ks and how much that you can contribute. And so there's definitely different tax advantageous opportunities that come from having a more flexible structure like an S corp.
Great questions, everyone. I just wanted to give a moment to say that we will be sending, I believe it just automatically pops up, a survey about this presentation. If you have any feedback, we very much welcome it and want to tailor this for you. Also, if there's anything that you think would be something you'd like to hear a presentation on, we would love to hear that as well. Any and all of the feedback is welcome and encouraged. And thank you, Andrew, for walking through that presentation.
Yeah, thanks everyone. This was really awesome. And I dropped it in the chat, but making time on a Friday to listen to a human talk about S corporations is just indicative of the investments that you're making in yourself as an entrepreneur on top of all the incredible work that you do. So grateful for that. And thanks for making it so fun.
Yeah, thank you, everyone.